Hi there. Welcome to yet another chat show. This is about dreamers and unicorns. And of course, who do we have today? We have Vani Kola. She is the MD of Kalaari Capital, and she has been responsible for a number of really successful exits. And these are the entrepreneurs that we are all aware of. These are the businesses that are super successful, whether you talk about Mintras of the world or Dream 11 and many of the others. We are going to talk about all of that. And so today's theme is really around what do you see are the dreamers and unicorns, and what are some of the missed opportunities? What are the opportunities that you think are coming up? So it is going to be a conversation about that. I'm going to invite all of you to actually start putting your questions on the on the chat box, and so we would love to have your questions there as well as we go along. So Vani, welcome to the show. And just a quick introduction about Vani. Of course, everybody who's involved in the investor community as well as the startup community in India knows Vani for her investments. But just a background that you may not know, she's been a two-time entrepreneur in Silicon Valley, and then she came back to India and started her own fund. And Kalari, is the one that she calls the fund, and it is about the Kalari form of martial arts. Is that right, Vani? Am I getting that right? Um,
That was inspiration for the name Kalari, yes.
and that this is Kalari Paya too, which is a martial arts form. Which and so the dreamers have to really fight for survival. Is that the reason behind the name?
I don't know about fight for survival. Dreamers thrive. I like sort of a positive visualization and language, but it was really about discipline, about making bold leaps, about persistence. Anything worth having in life takes time and hard work, and so that's sort of my inspiration and vision in acknowledging that. Energy of entrepreneurs, and that's how I picked the name Kalari.
Fantastic. I want to start by asking, what are you reading right now? You are an avid reader. I know that. So, what are you reading right now?
Well, Abhijit, I always have two, three books, that I have, and not that I'm reading them in parallel, but I pick up bits and pieces. Your book, Dreamers and Unicorns, I had picked up, and over the holidays, I was reading it. I'm mostly done with it. I also am somewhere midway with Range, and then I had also picked up. Schwartzman's book that had come out, and so these are sort of three there. But people kindly send me books, so and I think end of the year I've received a ton of great books actually as New Year wishes, and so I have a pile that I have to get through in the next 3-4 months. But I love your Dreamers and Unicorns, and I think. Especially the dreamers part. I think entrepreneurs are special in their ability to think big, which is really the dreaming part. And I mean, the unicorn is fine; it's a milestone, but I like to think about the impact that the lasting impact that dreamers can create.
And do you see yourself as a dreamer or a unicorn? After so much of
So,
success, what do you see yourself as, or a market shaper?
First, a lot of those words, Abhijit, it's cringe for me because I don't think of myself as particularly successful. I mean, I'm not saying I'm unsuccessful, but it's not the lexicon or the lens through which I channel my ideas and thoughts. I think I've always been a dreamer, and continuing to my quiet time goes into sort of visualizing what can be, how, and just energy of uh, achieving and helping support great vision. So I think it would be arrogant to say that I'm in any way a market shaper. So I associate with dreamers, but we have this notion somewhere that dreamers um, is in the vacuum. I mean, you have to be a doer too. You can't just dream. So you have to sort of,
Hmm.
dream, obviously, but then you have to be a doer. So I associate with dreamers and doers and the energy that comes with that. And everything else is, milestones of the journey. But, I mean, look, we all know that the joy is the journey, you know.
Oh, absolutely, absolutely. We've got a question from PK Gulati. PK wants to know that Vani has many other facets, lesser known. She loves art, and you look at the walls of her office. She loves to be adventurous, travel, TED. And how do you use these facets of your personality to find the best entrepreneurs? How would you answer that?
So, I'll confess here, I didn't know PK was on this call, and he's a dear friend from many years, and I've learned a lot from him. And also, he's been sort of a well-wisher, supporter, mentor through many phases and stages that we all go through. I think all of us are multidimensional, and sometimes we don't take the time to engage into our full, our full self. And I think it's important. Ultimately, life is about discovery of self. And you wrote a book. Maybe you hadn't thought about that 2 decades ago, and I'm sure the book is not about making money, because books generally don't make money, but it's an expression of self. So then why do you put the time into it, right? So it's for the joy of it. And so I think I have some boring interests also, so apart from work and reading and so forth, and they fulfill me. So why is that important? I think we need to be balanced ultimately on and be connected into the core purpose of life itself. And when you are only unifaceted, sometimes it's possible to get so myopic that you're not looking at the broader purpose and what you can serve in this world. So to be balanced, to be stable, you need where pressure and steam can come off. And so I encourage even the young people in our industry to say, explore your full self. Yes, of course, dreaming and being successful in one dimension is important, but pursue joy of doing things and experiencing different things that world and life has to offer.
So, let me start with some of the things that obviously you've invested in very successfully. I want to start a little bit about, you've got a really nice white paper on your site, which is about the healthcare industry. So when you look at that, where do you see that entire opportunity? So the healthcare ecosystem, starting with the doctors, clinics, the diagnostic labs, pharmacy, hospitals, insurance, devices, it's a lot of that. Where would you see is the first opportunity that if somebody were to ask you, what would you define that to be?
Before I go there, Abhijit, when I left India, my family didn't have a phone, right? Because
Hmm.
you made an application and it took whatever 10 years to get a landline connection, something that most of the visitors or listeners here probably can't relate to, right? And it needed something revolutionary to solve for that. It wasn't going to happen by us putting more copper into the ground, right? So, India didn't have the resources to do that. And of course, Sam Petroda came and he applied technology solutions to improve the telecom industry. And then the wave of, mobile phones, cellular towers
Sure.
allowed us to leapfrog and get, equitability from this access device, right? And you'll hardly find anyone who doesn't have a phone today. Let's take that inspiration to any other industry, right? And you mentioned health tech. So what is the role of technology? I don't think I have answers at a policy level from either creating more doctors or, affordable healthcare and so on and so forth. But technology applied right can solve problems to a certain degree, and that's something I am motivated by, and something I understand, right? So I do believe that whether it is at a device level, bringing affordability, access, and cost, improving those aspects so that same care can be available to broader citizens of this country, to every citizen of this country. And technology as an equalizer. I mean, today, whether it is remote ICUs or there's just so much that's happening from technology that can change access and affordability. And I mean, look, it's a constitutional right, and maybe we have a chance of delivering that in this decade better than we have in the last 7 decades. So, though India spends 140 billion in healthcare annually, it is quality care reaches only a small fraction of Indians. And, we did some work on smaller problems. I come from the school of thought of bite what you can chew. So, we looked at where can technology truly create, what's the low-hanging fruit for technology. There are some deeper problems, but they take time, they require policy, they require other enablers. But I do think that today, from whether it's chronic care management, solving for the larger socioeconomic problem, or being able to create affordable devices, technology can immediately play a role. So that's how I see almost every industry, whether it's health, whether it's education. Of course, we know from e-commerce, the digital acceleration and access and the fundamental shifts and changes to retail that has happened. But I believe the same thing is going to happen on industry after industry, some sooner, some later. And I think, health solutions is ripe for some benefits from leverage of technology.
When you see the system that you've sort of worked with, if you look at consumer tech, you've got a bunch of companies that you've invested in, and many of them have been very successful. So whether it is different kinds of, whether it's the Mintras of the world where e-commerce has really thrived, you're one of the early investors in that. Where do you see the next wave of e-commerce going? What is going to be the next big thing for e-commerce? How would you look at the landscape in India?
First, landscape in India, is changing from sort of the, let's call it 100 million people who were on these e-commerce platforms to the next 400 million. Everyone has been talking about that for a long time. And of course, now enough has been said around Bharat inclusion, so to speak, right?
Sure.
And I think that is both at the level of what it means from vernacular, what it means from mobile only or mobile first interfaces, what it means from explosion of D2C, direct to consumer brands. I think we'll see brand explosion at serving different segments of customer base, right, from price, experience, on many categories. And also somewhat, let's say, democratization of brands being able to access, because if you can cut through the clutter, you can get to your customers directly, right? And that sort of creates a better level playing field than entrenched distribution models that allowed several incumbent companies today to dominate, right? So I think the digital distribution changes that. I also think that when there is proliferation of brands, then consumers become more adept and more selective on experiences for which they are willing to in which they are willing to engage and for which they are willing to pay for. So I think what the large distribution platforms, the Amazon, the Flipkart, the Geos are there. I think it'll be hard to create a massive distribution platform, but what definitely will be, the next decade, continuing explosion will be, creating different consumer experiences and verticals in terms of specialized product solutions, and D2C brands.
When you look at any of these companies, and you've got some of the four or five big ones which everyone is aware of, so whether it's Dream11 or say Myntra, CureFit, Snapdeal, is there an example you can give me where it started? What we know of it now is very different from how it started, and that journey of that pivot, and what are some of those um, shifts that the entrepreneurs have made. Uh, Talk to us about that.
The fallacy by and large is somehow that the plan that the entrepreneur starts with and puts down on, let's say, the proverbial napkin stays the same through the growth of the business. I think it's a starting point, but entrepreneurs who can continue to refine their vision and continue to pivot as market opportunities evolve, cut out of the clutter and kind of lead the pack. And I'll take example of Cult or CureFit. And, if you're into wellness and fitness at all, you would have experienced the brand. And I think it's a fantastic brand, and started out with the largest fitness chains, and really making fitness and wellness a priority and accessible to at least urban Indians to begin with. Okay, but obviously with the pandemic, we all know that all of us have sort of sequestered ourselves into our
Sure.
our phones. But they did a pivot immediately. I mean, they couldn't envision this into any business plan you would write, and I mean, they did a remarkable pivot of accelerating digital services, and within, I think, a week they had moved completely online and continued to experiment early with various formats to understand how their customers could move online. And honestly, I personally could have never a year ago imagined that I would be using this service in a completely online format and get 100% and in fact more benefit from ability to be consistent and so forth. So this is an example where, of course, the unusual black swan circumstances demanded a pivot, but it's the mindset and capacity of the leadership team to be able to react to circumstances, and sometimes it gets tested in a significant way, but it's a daily thing. I mean, it may be more incremental and nuanced, but it is a skill set and a quality that is really, really important. And so I mean, we could go on so many examples, but I think almost every company does a pivot. We imagine the pivot to be something that's sort of leaving current business and going into completely new business, but it's the pivot of the matching of your vision, product to customer need, and being able to triangulate that sensitively on an ongoing basis.
I think that pivot in my mind is, that the constant need to be able to find the fit, the product market fit. And it's not something that you do one time and then you kind of, build on it. It's something that keeps evolving and shifting. We've got some questions from the audience here. So Praharaj wants to know what's your view on bitcoins, and would institutional investors, they are getting very serious in US. Will this follow in India as well? What is your take?
I mean, in India, I am not sure that, at least from a Kalaari perspective, we would be investing in Bitcoin anytime soon. I think regulation has to lead in this first before investors follow on something like this, because it's not just a private enterprise. Obviously, different regions, different countries will have different latitude and flexibility in this. But India, certainly, it will not be possible for private enterprise to lead this without government policy and regulation. And when that happens, which I don't see happening in the, let's say, next 12, 24 months, and so hence it wouldn't be on our roadmap in the next immediate future either. And if the regulatory framework for Bitcoin gets defined and approved by the government, then I think we would definitely be an investor, very hot to pursue. But lack thereof, I don't think we would encourage entrepreneurs to waste their time with us, at least for any Bitcoin ideas.
So, a couple of things. What I hear you say is that you started first. I am summarizing for the purpose of some of our listeners who've joined in a little late. So, one of the things you talked about was the importance of actually leading a very wholesome life, not just your work, but also your own interests in meditation or reading and things like that. And I know mountaineering. We'll talk about some of that later. But that was one idea that struck with me. The other I also thought, which was interesting, is your view that this is a sort of a market. India is really looking at. We've had one wave which has addressed the first 100 million, and then we see a big opportunity for Middle India, which is the next 400 million. That was the other piece. Um, we have a question here from Jay Tarimala, whose question is: a lot of the startups are Me Too's, and how do you go about finding if a startup really has something unique that cannot be replicated for at least a couple of years? And I'm going to add to it this whole twist that the business will pivot. How do you sort of really assess that in the next 2 or 3 years this is going to be a viable thing, even if it shifts a little bit here and there?
No, first I want to address this notion of Me Too. And yes, sometimes on the surface, companies appear to be Me Too, and many of them are truly Me Too without any sort of depth of clarity of differentiation. But Abhijit, I would say if you look at Wipro, TCS, Infosys, let's say, they're very large companies, and let's not even go to the next tier companies. Would you call them Me Too? On the surface, you could call them Me Too, okay, because they are all at one level addressing a large market problem or market opportunity. But within that, they must differentiate, and they do differentiate. And and as an investor, you have to get to the nuances of the differentiation that allows them to either pursue a certain vector more deeply, or certain specialization or geography, or a certain band of service. Those all can be differentiation. So there is often, as they say, throw the baby with the bathwater. Oh, VCs only invest in Me Too companies or something like that. And I'm not saying VCs are sort of the brightest and the best, but they're not completely foolish either. Okay, so for me, and you could have said Google is the 12th company in search engine, and
Sure.
they're a Me Too. So I think it's not like that. I think the market may be the same, the problem may be large, and people may be chasing the same problem, but how do they approach the solution with that problem can have insights that afford them the ability to truly compete. So when I meet entrepreneurs, I want to understand what is their insight, right? And they're usually not complicated. They are not rocket science. There is, look, I am going to approach it this way, and I think there is an opportunity for me, and this is sort of a gap that has been left and hasn't been thought through, and I'm going to sort of make my way through it. So when a entrepreneur has that sort of clarity of insight, that's what is exciting to me on how they are going to create a unique differentiation, even if it is a Me Too in the context of chasing something that somebody else is doing already, right? So how do you know they'll pivot 2-3 years from now? I mean, you don't know. You're looking for intrinsics of a person, and it's the quality of conversation that you have with them that through which you have to build this projection of how they're going to react to dynamics in the market, dynamics in the team, dynamics among shareholders. Do they have the leadership? Do they have the capacity? Are they active listeners? Are they decision makers? So these are things that you are subjective things that you are testing for in trying to partner with an entrepreneur as an investor.
You talked about a number of really fabulous set of points of view, what you would evaluate. My question would be that do you, if you had to choose to distribute some weightage between the product idea, the product market fit, and the entrepreneur themselves, the personality, their own clarity, their own ability to think about a bunch of things, what would be the weightage? Do you put more weightage on the product? Do you put more weightage on the person? And if so, what difference? How large is that difference?
Weightage on the person is probably 40% of the decision. Weightage on the product is probably 30% of the decision. And everything else, the market opportunity, how large it's going to be or not, and everything else is probably the remaining 30%.
What is a question from Chandan Mahajan. The question is, what is more important for a startup to chase, value or valuation? Or are both equally important? One is, I am going to assume that the person means that creating value, which leads to valuation, or, there are other ways in which you could play the market and enhance the valuation. What's your advice?
I mean, I would ask the entrepreneur to really sit for a minute, meditate, ask in their heart what they want, right? Because each of us will chase what we want to chase in our lives. It's not what I have to say about it that matters. It is your company and you are the entrepreneur. And, what are you looking to get out of this, right? And some are looking to get to a certain point and exit. Some want to think more long term, and it's not that short term, medium term, long term. We can say you should only be one thing, but at least be clear what you're looking for, what you're chasing. Don't chase the wrong thing that you don't want, right? So the wrong right of this really has to come deep down from the entrepreneur, because you're going to make many decisions along that line, and they're not always, it's like, if you start with a 10-degree separation, over time that same 10 degrees, just are not, reconcilable. They're not roads that can easily meet. So I would urge entrepreneurs to think about, why do I want to be a founder? What will define success for me, right? And what am I willing to risk? How long am I willing to commit to this? So these are all deeply, truly introspective questions, and one can't give prescriptive answers because, to your question, I could be prescriptive and say, oh, always chase value and don't chase valuation or whatever. But entrepreneurs are going to chase valuation,
Sure.
Because to someone that represents their achievement or endorsement of the value that they've created, or simply it allows them a chance to create value creation for themselves and shareholders. So I don't think we need to pick one versus the other, because there are so many factors to the circumstance. You just have to be very, very clear, what are you chasing?
Do you, even if that, so would you back whether value or valuation with equal gusto as a VC? Would you do that regardless? So, which means your view is, once you decide to go with a startup, you will work with them regardless of whether that would have been your choice or not. Is that fair to say? You may have chosen value, somebody else may have chosen valuation. Would you still back them up with equal gusto?
It's kind of like this, right? It's a partnership. And if you choose the wrong partner, either way, right? The entrepreneur chooses the wrong VC, the VC chooses the wrong entrepreneur. That's problem. It's not marriage made in heaven anymore, right? Because they have become reconcilable philosophies. So I think it's important for both to sort of be really aligned. I can't choose value if the entrepreneur is choosing valuation, so to speak. So if there is a dissonance of ideology, hopefully at least there is enough maturity to know how to part ways amicably without being destructive to each other, because that's the only option left, right? Now, chasing valuation, I mean, really, you can chase whatever you want. I mean, you can chase the most beautiful girl, whether or guy, doesn't matter, but whether you're going to succeed, that's a different question. So this notion, should I chase valuation? I mean, they are interlinked. Value and valuation are interlinked. Okay, they are not completely divorced from each other. The question is, what do you emphasize? That is really the question,
Sure.
and that is really more a personality question, these don't stay in a vacuum, and I've seen sometimes entrepreneurs get stuck. We had a company that the entrepreneur wanted a certain valuation for funding, which we didn't think the market would support, and we tried very, very, very hard to encourage the founder to be more realistic about valuation. But sometimes this is emotion. I mean, it's not that they're great guys. I mean, obviously they worked hard to create a great product, great customer love and market, but they get emotional about valuation at times. And then a good company with a good product chases wrong valuation. The market is not ready to pay it. You are gone too far into it, and you don't have bank cash flow to support this forever, and then it very quickly can spiral down. And I've seen that happen, and it's painful when that happens. It's painful because fundamentally the company was sound, but they had a disconnect in the dream. So you can be a dreamer, but you also have to be a realist. So there is a fine line between being a dreamer and being a realist, and you need to know both sides. And so you can't really just chase valuation. That's a myth.
There's a question from Sonali Gupta. She wants to know what is there anything like the correct time for an IPO? When a company decides to go for it, how do you know that this is the right time for an IPO?
Can you be in a startup when it's private? There is a lot of chaos and unpredictability, which I think the board and investors make space and room for, because the relationship is different. A public company, of course, requires from the shareholders require you to be far more predictable. Okay, you can't just give a earnings guidance and then be off by 30-40%, right? It also requires a different kind of a team, and not all founders will make great public company CEOs. For example, I always knew as an entrepreneur that I would not enjoy being CEO of a public company. Okay. So, and there's nothing wrong in that. Just know what is it that you like, what is it that you enjoy, what is it that you're not good at, And so, if you want to take a company public, your role as a CEO fundamentally changes. I love playing with the product, so I'm not going to enjoy being a public company CEO with all the requirements that come with it. So then you have to make sure you hire the right team to take the company public. And this is where, there are conundrums that the founder has to resolve in themselves. It requires really a personality change in order to take a company public. So what is the right time to take a company public? First, you have to be ready to make the deep institutional changes into the company, which takes a couple of years to plan and prepare. And sometimes, I hear some CEOs say, oh, we'll go public in 9 months. I mean, it's not possible. There is a systematic laying of ground to be able to take a company public from team and bench strength. Second, of course, you need to be at a level of maturity as a business where you can provide predictable guidance to the market, right? Third, you have to continue to create shareholder value. So it can't simply be a liquidity event. And that's another popular mistake, oh, IPO will be a liquidity event. I mean, your problems start when you go IPO, okay? So you have to continue to build value. Ask yourself a simple question as a individual investor. Today, are you going to buy stock of a company that doesn't provide extraordinary return for you? You're not, right? So when you go public, remember that you have to continue to create value, and you need to have that kind of planning and strategy to be able to do that. So when it's right time, you will know. It's not a guesswork, because it's very definitive when you're ready to go public.
I also wanted to ask you that give me an example of a actual scenario, and you may decide to use the name or just make it, anonymous. A scenario where it's a typical conversation you've had with the founders in the early stages, which is about not the product, but about building the organization. What is the most common conversation you've had with the founders?
What is the culture of the company they're trying to build? And that encompasses many things. What's your compensation philosophy? Okay. Which includes not just the salary and increments, but ESOPs, right? The founder has to set in ground what are they, how are they envisioning building this company, right? What kind of team culture and hence people are you looking to bring on board? And there are many leadership styles, okay? And these are well researched and documented. So you have to decide what is your leadership style. I mean, not that you wake up one day and decide. You are who you are. You just need to know who that is. And, and there is certain people for certain environments. And so, you need to understand that enough to be able to do that. So, culture from reward structures, culture from leadership, styles, and what are some of the principles of your organization on how you want to build it, from level of hierarchy or transparency and information sharing. And again, it's not that there is right or wrong answer. There is, of course, a spectrum of answers, but you need to be thoughtful and definitive about it, so that people around you know what is this organization, how do you thrive here, and how do we succeed here.
Many of the startups that I've sort of worked with, one of the areas of challenge for them is the ability to hire really great talent in the early days. Is that a time when you kind of really think that you have to tone down your expectation because you're not going to be able to pay the big bucks? And if you're going to hire experienced people who can fast track your product, you have to get really good people. How does one solve that problem? What do you see successful people doing? What are they doing right?
There are many options. You could take an option to groom talent from within. So if you can identify bright people who have a lot of headroom and haven't yet fully proven themselves, and if you're able to provide them a high growth opportunity, and you're able to do that consistently, that could be your cultural differentiation as a company. And I think a lot of Silicon Valley startups manage to crack this right. So that's one. And also, yes, experienced people cost a lot, but if your philosophy of a company is about people who take the risk with you and share in the upside reward, I think smart entrepreneurs are good sellers. Okay, and I'm not saying selling. I mean, we have this connotation: selling means you're false or making false promises or cheating. I mean, selling just means you are very articulate and convincing to have people believe in you. And obviously, you cannot violate that trust. But just having the skills to be able to communicate. So you're selling to future employees to share in your vision and purpose, and give up whatever their opportunity cost to work with you. You're selling to investors to believe in your dream and realization of that dream, and you're selling to customers. So great entrepreneurs are innately good sellers. Okay. And so somebody could come to you, Abhijit, and say, look, I'm building the next best world's whatever, and I want you to work with me. And if you got fired up by that vision, maybe you will, and you will not look for it just in a day-to-day monetary outcome that the startup cannot afford, but on a longer term, that getting equalized. So smart founders will get great people to come and work for them, and not have the excuse, I can't afford to pay them. Of course you can't afford to pay them, but if you can get people passionate about your vision, I think you will be able to bring on board great people. So I think it's both about grooming people from within, which I think is very important, but also getting experienced people to endorse you and your vision and partner with you.
And is there usually a clash that, when you look at, the advisors or the VCs, they're usually people who have seen a couple of springs, they've got the experience. And then you have, a lot of the startup founders with relatively lesser experience, but they are very fired up about their vision and the product. Do you sometimes think that it's something that the VC and the founder, they struggle with to build that idea that the suggestions that are coming from the VC are not always palatable to the founders?
Here is the rule book I use, right?
Hmm,
First of all,
hmm,
is the founder's company, right? I'm here as a shareholder, and I'm not in the trenches, right? They are in the trenches. So active listening to what they're saying is very, very important. Okay. And
hmm.
secondly, by and large, most of the time, we want the founders to lead with their conviction, not with my conviction, because they are in the trenches, like I said, right? So the founders are empowered to make decisions. Obviously there are decisions like compliance and governance and things like that are non-negotiable. So
Hmm.
we can't cute and cut corners on those kind of things. Okay. But we are obviously not talking in talking that, though sometimes we see that also happen, and then we take a very firm no, you're not going to dip into the customer's escrow, or you're not going to play with the statutory dues, or things like that. So if we are having conflict on that area, the game is lost already anyway. And but if you're talking about strategy, product, hiring, by and large, the founder's word is the final word. I have an opinion, but it's just advice. That's all. That too, because you asked me for advice. So that's how we look at it. But I respect them to make the final decision. Now, sometimes you can see a catastrophe looming, like someone saying, I want a valuation of 200 million, which I had a founder do, and I didn't think they would even get half of that, and that the market wouldn't give that, and it turned out we were right. But there's no joy in being right, because this is a catastrophe for the company, and hence for us also, right? So now you do your best to guide and advise. But look, I have 2 children, and what I've learned is, you have to be direct, you have to be forthcoming, you have to know when to hold back and let them be, and you have to, when you think there is a catastrophe, you do everything you can so that you don't regret that you didn't do enough. And it's up to the founder to listen or not. But if both people have respect and trust, we can have these difficult conversations. They ought to be rare. If we are having difficult conversations every day, it's a problem. And generally, it's not like that. I mean, that may be a perception, but generally, I don't see having difficult conversations with founders daily. And the times that you need to have that, mutually, there is a skill on being able to listen and put forth your point, maybe firmly, but with respect and with professionalism. And more often than not, that takes care of itself. The times where there is really catastrophic ideological differences, I mean, I would say that's like 5% of the situations are like that. So that's not the norm. I'm not saying it doesn't happen, but that's not the norm.
Well, when a person comes to you initially, exploring the idea and exploring the idea for getting help from you, is there a question that you always ask? What's your favorite question to ask? Somebody who's come to you for funding. Whether you fund them or not is a different question. But what's your favorite first question that you ask, and what is the last question that you once again check before you decide to go ahead and partner with them?
I wish I had a script like that. I don't. I'm more of a listener. I want to hear the founder. I want to just really be in an active listening mode. If there are questions, it's because I'm not understanding what their product is. Okay. So, and too much time has gone by and they're not focused on the product. So I want to course correct them to talk about the product, because first, to me, I have to connect into their vision and connect into the product. Too often they want to talk about this is a $20 billion market. I mean, I couldn't care less. I mean, we have zero revenue right now, right? So if it's a $20 billion market, you have no focus, right? Because you can't chase a $20 billion market, right? Like saying e-commerce will be $100 billion market, so be it, but what are you going to do in that, right? Tell me how you're going to get to 10 million revenue and then 100 million revenue in the next 5 years. I'd be thrilled and happy. You should be thrilled and happy. So the $100 billion market is irrelevant to our conversation. So sometimes too much time goes by and we are still not understanding what is that unique insight, what is that vision of the product. So if I ask questions, it is really I'm not satisfied till I understand what the product is. And if we spend enough time and I can't get the articulation of the product, then I'm actually don't pursue that investment. So there isn't a first question or a last question that way, right? That's kind of the, tick. It is a, lot of small things. Sometimes you may be pushing them to get this clarity on the product and they get very irritated or they get very defensive and about it. And I know that we are not going to be successful in a board meeting challenging the founder. Challenging is not in a bad way, challenging so that you do better. You do, I mean, if you have a sports coach or a personal trainer, they're supposed to challenge you. They're not supposed to just stand there and be a cheerleader. They do that too, but there is, you shouldn't get a board member who can't challenge you and push you to your next level of thinking and next level of being, and sometimes people say, oh, how can I have a good board meeting? To me, a good board meeting is where we have argued a lot, okay? Which means that there is things to discuss and it's not about everybody agreeing, and not that we need to have disagreement. That's not what I'm saying, but there has to be enough high quality debate and discussion. Are we able to do that? So sometimes in the interaction you discover that it is not possible to have a high quality debate and discussion with the founder, and that then is not interesting to me because we are going to clash a lot later. So there isn't a first or a second question, but I think generally when we meet founders, I at least tend to be in a active listening mode to pick up what is the differentiation, what are they emphasizing, what is their focus, and so forth.
We have a question from a LinkedIn user who says, what qualitative or soft criteria do you use while deciding on funding a venture? Is there a soft criteria? And what is the proportion of qualitative versus quantitative inputs while deciding to fund a venture or not?
I think the quantitative is obvious to everyone, right? And I think that's the easy part to put aside. We actually don't need to have a big discussion on the quantitative unless obviously there is a fundamental disagreement on it, in which case anyway there is no possibility of reaching to funding at all, right? So sometimes we get caught into entrepreneurs saying this is my revenue, and then as you go into it, it's not revenue, it's not even bookings, it is a notional contract value, right? So now if you don't know the differences between those and deliberately or unintentionally misrepresent that, that's a big problem, and thinking that that makes the project more interesting to the VC. Don't do that. Be your authentic self. They have to invest into your current situation of the business and your authentic self. Otherwise, they are not the right partners. And if by mistake they invest, then you're going to have an adversarial relationship because you're not aligned, right? So on qualitative, I think we put that aside fairly quickly, and either the project is interesting or not interesting on the qualitative, and we get to that answer reasonably quickly, right? The qualitative is the qualitative is always the subjective, and that takes more time, and that has to do with you're sitting here today and you have to think on multiple things. Is this person going to be a leader who can build a great team? Is this person going to be able to raise follow-on funding? And are they going to be able to build constructive relationships with co-founders and with shareholders, right? And do they have the resilience to really play the long game, right? This is a long game, and it requires all your energy, all your focus, for 5 years if you're lucky, maybe a decade, generally, right? And do they have that kind of stamina? Those are some of the, qualitative assessments to make.
Fantastic. A very quick response on what are, a lot of people spend a long time polishing up the pitch deck. What are the 2 or 3 things you think define a good pitch deck? What would you say?
Well, don't spend the time polishing a good deck. I'm not looking for that. I don't know if any VCs do or not, but at least if you're coming to Kalaari, don't bother about a polished pitch deck. Oftentimes, not oftentimes, sometimes, there is a very polished pitch deck, and there is a banker and the CEO, and the banker does the pitching. After 10 minutes of that, I stop that and say, I want to hear from the CEO. Could the banker leave the room? So I'm not investing in the banker. I'm investing in the CEO. If you're not going to talk to me, right, it makes no sense at all, right? So don't do that. I'm not looking for a polished pitch deck. I didn't expect them to go to NID or something, right? So I'm looking for authenticity and clarity. And if you have that, in fact, I put this on LinkedIn some time back. If you look at the original deck for Airbnb, if you look at the original deck for Uber, they were not very polished decks, but you saw what their vision was even in those first versions of those decks, the clarity or the vision of what those founders saw as a problem and a market opportunity, and what would be a unique way their solution would address that, right? So you don't have to be a graphics expert. I know you can hire one very successfully later. So, and you don't even have to be like polished English or great communicator or whatever, but you have to be authentic and you have to be very clear what you are trying to do and why.
I'm going to sort of switch to the personal side of Vani, and which is that, you have a number of different interests. How do you balance your time? You also have an interest in climbing mountains. Tell me about that. How did you get into it? What was the first time you felt this is something that you want to do, and what's the biggest peak you climbed? And so there's so many things I want to, ask.
Biggest peak is Kilimanjaro, but my dad would always take us on small hikes. On our trips and on village and all of that. And I think he was very much a nature lover, and I think it was there from the beginning, right? Obviously not in the city, but for summers. Sort of roaming the countryside of India, and then attempting these smaller, hikes, if you will. So the biggest was Kilimanjaro, and for some reason that mountain fascinated me from some geography lesson in school, and saying, "Oh, this is
Well,
something to."
tell me about that lesson. What was that dream of Kilimanjaro? What was that like?
I think the first time, I read about Kilimanjaro in, like I said, some geography class. It has various climate zones, which is unique, right? It's in Africa, close to equator, but it has a glacier, which unfortunately is melting now. But, and you go through like a tropical zone, you go through an arid zone, you go through a desert, you go through rainstorms, and then you also get to glaciers. So it's actually not that it is difficult. It has just all this climatic zones, and you need to be prepared for that, right? So somehow that fascinated me, and something I did with a group of friends. And then uh, different peaks in Bhutan, and kind of Girwal Mountains in India. And but I mean, I just love being in nature. So it's not just about the mountains or anything like that, because I haven't like climbed Everest or K2 or anything, that difficult, which takes intense training, which unfortunately I haven't had the time to set aside. But I just like spending time in nature. So a great vacation for me is either with a book or in the nature.
What is the greatest personal difficulty, the greatest mountain for yourself personally that you have climbed? What would you say has been the greatest difficulty you have overcome? Tell me about that.
We have many aspirations in life, and they each come with a cost. And
Hmm.
many times uh, we aren't thoughtful about what is the cost, and so you have to be prepared to pay the price for what you want, and uh, I think I was a very young mother when I started my first company, and trying to find that balance of being a mother and yet running a startup was, I think, a deep journey of self-discovery and formative of my, ideas and philosophy of life that, I had to refine because it was tested to the core. And the outcome of that for me was to not feel guilty for my aspirations, right? This is what I want, this is who I am, and it's just a statement. It doesn't have to be justified, it doesn't have to be offered for judgment or approbation by anybody else. Just knowing what you want to do and why, and then being able to just do that for yourself, on behalf of yourself. These are all lessons that each of us will need to learn, and that satisfying yourself is okay, right? And like I said, the journey of trying to be balanced in life, and again trying to do that without being apologetic to it. And so I think the journey of trying to find your authentic self through whatever mountains is always really the true mountain to climb, your inner mountain to climb, discovering and being authentic to yourself.
No, it's such a brilliant answer. Thank you. Vani, if we are pretty much at the end of our conversation time, if people want to connect with you, where can they find you? Tell us about your social handles or your page.
Vani at Kalaari.com is available on Kalaari website. So you're always welcome to reach out on email that way. And, I'm reasonably active on LinkedIn, and you can find me there. It's at Vani Kola, as simple as that. But yeah, so I'm available. And, one of the things, Abhijit, I leave with in the minute that we have is, our success comes by standing on shoulders of many. Some we understand and realize and acknowledge. Many we, may not even be fully aware, how our success is contributed by many others, right? So, but one thing is clear, that our success is never our own. And so I know that, many mentors many well-wishers have, enabled me to achieve whatever little I have. And so contributing back to the ecosystem and paying forward has always been something that is, important to me. And uh, I do it in whatever small way I can. So I'm not hard to find. Okay. And so people can find me if they want to find me.
Thank you. Thank you very much. And if you have any questions for me, listeners, thank you so very, very much for joining and for all the questions that you've shared here. It's wonderful. And if you have any questions that I can follow up and respond, just drop me an email at Abhijit Bhaduri at live.com, ABHIJITBHADURI at live.com. And of course, all the social handles are given there on the screen. Thank you so very much for joining in. And Vani, I cannot thank you enough, and especially for the last bit which you talked about your own internal mountain that you have to cover. I just thought it was so much that you shared with that. It was brilliant. Thank you so very much for your time. I look forward to being in touch.
Thank you for the brilliant conversation we had. I enjoyed it totally, and for your great book.
Thank you very much. Bye. Bye.
Bye.